Welcome back to the channel, everybody. My name's Artie with CoinCasso, and this is Bitcoin Today, a show where we keep you up to date on everything cryptocurrency. In today's episode, we discuss why Bitcoin went and then went. We also talk about the Bitcoin options market going 10x over the last month and how the whales caused Bitcoin to go to $8,900. We also run over the current top cryptocurrency prices as well as a brief analysis on Bitcoin. This show is designed to give you all the relevant information you need every single day in the cryptocurrency space, so sit back, relax, and enjoy the show. Good morning, everybody. It is Tuesday, June 16th. Thank you so much for joining me every single day. And if you're new here and you like what you see, consider subscribing down below and taking the notification bell to get notified every time we upload a new video. And as always, the channel is sponsored by CoinCasso Cryptocurrency Exchange. So if you're unsatisfied with your cryptocurrency exchange, like Coinbase that crashes every single time that the price drops or goes up, consider checking out CoinCasso in the link in the description down below for a $35 sign-up bonus. Now let's run over these cryptocurrency prices. Bitcoin is currently at $9,538.58, up 4.19% in one day. Ethereum at $232.75, up 3.18% from yesterday. EOS not doing as well, up 1.85% at $2.55. And Litecoin up 2.44% at $43.93. Now let's jump into TradingView and do a quick analysis on Bitcoin. Okay, so I have the daily chart pulled up since the bottom of March 12th right here, the coronavirus pandemic outbreak, complete and total crash, and we've been on this nice upwards climb ever since. After the stock market saw a big sell-off a few days ago, we dropped out of this ascending channel. Now we've taken it in even closer, and I want to show you guys this. This line that I've drawn here at $9,300 is very crucial because over the last year, it's been the most consistent price of Bitcoin. It's used this level as support and resistance over 25 times over the last year. And as you can see, we're playing nicely in this range. Now I've taken it in even closer to the 4-hour chart, and this is the big stock market drop that we saw, and Bitcoin followed suit by dropping down a lot, down to just above $9,000. It immediately recouped 50% of its losses, but then traded sideways for about 2 days. And as far as I saw in the news, this latest drop off here was due to whales selling off and taking their profits. However, Bitcoin below the $9,000 range has a lot of new buyers. People either like to get in the game below $9,000 or they like to dilute the price of their current Bitcoins by buying in lower, which subsequently caused the price to spike back up and is now playing at about that $9,500 range. Personally, I do not like to see these big drops and big spikes in price because they're not very consistent. If we saw a nice steady climb up, then I'd be more confident in the fact that Bitcoin's going to maintain this upwards trajectory. But with spikes up like this, we could also see the subsequent drops back down. Now let's take a quick look at CoinMarketCap to see what the volume was in Bitcoin over the last 24 hours. Now yesterday's volume was 18 billion, and today we had a nice spike up and are currently sitting at 26.6 billion. Let's jump into the news and find out what's going on. This first article is titled "Bitcoin Drops Then Pops as Traders See Weaker Markets Coming." Bitcoin took a hit Monday only to recover as many market participants see price weakness ahead. Traders say traditional markets seem to be taking the lead these days. Our actual concern at the moment is the correlation between equities and gold. Singapore-based quantitative trading firm QCP Capital wrote an investor note on Monday. If both start trading lower in tandem, which happened prior to Black Thursday in March, and also before the Thursday sell-off last week, it could be a strong signal for BTC to trade a leg lower as well. Indeed, both Bitcoin and the S&P 500 saw similar movement on July 10th's drop across most markets. Gold has held its own throughout the year, with an exception of the March decline. I just realized that this article is no longer relevant because a bunch of whales bought Bitcoin below $9,000. causing the price again to decouple from the stock market, so their predictions and analysis are complete hogwash. It blows my mind to see the same technical indicators used for such a volatile asset as Bitcoin that they use in the stock markets to predict the price in the future. Because unlike the stock market, somebody could actually sit down on an exchange, buy 200 Bitcoins, and the price could shoot up 7% in one day. Then the rest of the normal people that have Bitcoin see the huge price increase and sell off as well, causing the price to drop down. And that's where the cryptocurrency gambling comes into play in the futures and options market, which brings us into our second article, which is titled CME Bitcoin Options Market Grew 10x over the last month. Over a recent 30-day period, the total open interest for CME Bitcoin options increased more than tenfold, from 35 million on May 11th to 373 million on June 10th. Moreover, open interest made a new all-time high on 6 consecutive days from June 5th to June 10th. Significant growth in CME futures points to rapidly growing interests by institutional investors in trading regulated Bitcoin derivative products. Despite this growth, however, CME Group has no plan to introduce additional cryptocurrency products. Thus, for now, CME Group's cryptocurrency products will only involve Bitcoin. CME, which launched its Bitcoin options product only at the beginning of 2020, now represents over 20% of the global Bitcoin options market measured by open interest, or the total number of outstanding derivative contracts. It's now the second largest Bitcoin options market in the world, behind Panama-based Deribit, according to Skew. Growth in CME Bitcoin options market is a strong signal that regulated institutions are exposing their books to Bitcoin. CME has a higher cost of capital and is closed on the weekends, so anyone trading there is likely making those sacrifices because they have to. Much of CME's growth appears to have come at the expense of Deribit. Market shares claimed by the competing Bitcoin derivatives market Ledger X, Banked, and OKX have remained largely unchanged since January. Now, we've discussed this over the past few weeks, how the Paul Tudor Jones hedge fund has allocated anywhere from 1 to 2% of their total portfolio into Bitcoin futures. Now, most people misunderstood this move and they thought that they were actually investing in Bitcoin for the long, but what they're actually doing is gambling on the future price of Bitcoin, whether they're shorting it or going long, meaning they're expecting the price to go up or down. And on to our last article of the day, which is titled Bitcoin Price Drops to 8,900 Caused by Whales Selling at Major Exchanges. As the weekly open commenced, Bitcoin dropped below $9,000 in a rapid pullback, liquidating $30 million in longs on BitMEX alone. According to market data, part of the sell-off was the movement of crypto whales closing positions, which led to panic selling among retail investors. Whales, individual investors that hold an immense amount of Bitcoin, have the ability to significantly impact the price of Bitcoin, and according to on-chain data provider CryptoQuant, the recent selling is indicative of the start of a bear trend within the market. Let's find out why the whales are selling. There are 3 reasons the whales feel the need to take profit at the current price level. One is that Bitcoin rejected violently at 10,500. The other reason is that mining difficulty is expected to see its biggest increase since January 2018. For whales that hold large amounts of Bitcoin, liquidity is key. If there are not enough buyers in the market and one large whale begins to sell, it can trigger a cascade of sell orders and liquidations. When the volume on the spot markets stagnate, the futures market activity increases for whales. It triggers concerns of rapid correction in the near term. How amazing would it be to own like 200 Bitcoins? This is currently how people make money in cryptocurrencies. They wait for the price to go up, they sell, and then it drops back down. And then they buy in at a price that they feel comfortable with. It spikes back up over the next few days, they sell off again, and that's the turmoil that we're in. Like I mentioned before, these whales have a huge impact on the price of Bitcoin. When we do see a huge price fluctuation like that, that's when you look at the futures market. Either people are going long or shorting Bitcoin, and those positions get liquidated when it breaks outside of that price range. Seeing a huge liquidations in the futures market also affects the price just as much as whales do. This is why Bitcoin has so much volatility and why it's very risky to get in and out of the market at the wrong time. I'd love to know where you guys sit on this. Are you a futures and options trader, or do you hold Bitcoin for the long term? Meaning, do you trade Bitcoin on the futures market, or do you use it on spot exchanges and actually buy and sell at the current prices? Let me know in the comments down below. I respond to every single comment. If you guys liked this video and you got some value out of it, I'd really appreciate a thumbs up below. It makes me feel good about myself, and it makes the channel look good. Thank you so much for watching, and we will see you back here tomorrow.